Protecting your practice. Thank you for joining me today. My name is Cherish Dela Cruz, and I help busy female practice owners create comprehensive life and business plans that prevent unnecessary stress during life's unexpected events. My estate planning practice is in Atlanta, Georgia, but I am licensed in both Florida and Georgia. Today, I want to talk to you about your most prized resource, which is your business. Owning a business can be tough and challenging. However, with the right steps, your business can thrive. Your practice may be just starting out, or you may have been in practice for a long time. Even if you've been in practice for a while, it is always good to do an audit of your current business practices and see if they are working for you and for your business. Today, I'm going to talk to you about 3 key things: the foundation of your business, estate planning foundations that you should be aware of as a business owner, and planning for the future of your business. The goal of this video is to give you an overview of what you should be thinking about with respect to these 3 areas. This video is not legal advice, but key considerations that you should take into account as you plan your business's future. In working with many physician practices, I found several common concerns which are highlighted here. First and foremost, the physician business owner needs to ensure that their business continues if they become sick or disabled. Second, business owners want to ensure that they have a plan to exit the business. Third, they want to ensure that the assets of the business are protected, and they are concerned about taxes. Today, I'll only be going over these top 3. And later on, in another separate video, I'll be talking about how to strategically protect the assets of the business. It is important to pick the right business structure when you are first starting out, and then continue to evaluate that business structure as your business grows. If you are just starting out, you need to make sure that you're picking the right business structure. Also, if you've been in practice for a while, it is good to evaluate with all of the recent tax changes whether or not a limited liability corporation is still the best venue for you, or if your corporate C or S corporation is the best way to take advantage of tax laws. Tax laws change from time to time, so what might have been good when you first formed your corporation might not necessarily be good now. In working with my clients, I collaborate with a team of their advisors, which is usually their financial advisors or CPAs, so that we are all on the same page. One of the major concerns that I see when I work with my physician owners is they don't either have a suitable operating agreement or a shareholder agreement. An operating agreement should not be standard. It should not be something that has come off of LegalZoom. It needs to be crafted for your business and specifically detailed for your own unique business situation. Everything should be customized for your situation. Some people are 100% owners and others are partners. If you do have partners, you need to look at that partnership agreement as well. Now, in evaluating whether or not, and looking at your corporate form, you need to make sure that you as a business owner are following the formalities of what is required of your business. So you should look at the business structure, whether or not it's an LLC or a corporation. And the reason why is it protects your assets. You need to document. Unfortunately, we live in a litigation-happy society. Doctors are under scrutiny and need to make sure that their business is following the legal rules. This adds an added layer of protection and is generally your first line of defense. Record keeping. Keeping good records for a business is critical. Is your company keeping good records of all of its income and expenses? Is your company keeping track of all of its contracts? Is your company keeping track of all of the employee records and keeping track of all of the tax filings required? This is essential when you're thinking about currently how your business operates, and also in the future when you're thinking about the sale of the company. Most business owners don't necessarily think of this on a day-to-day basis, but it should be on your yearly tickler list. Now, unfortunately, there is the issue of divorces and bankruptcies. Almost 1 in 2 marriages end in divorce, and there's approximately 1.2 million bankruptcy filings each year. You need to make sure as the business owner that your operating agreement or your shareholder agreement addresses these key things. If you have partners, you do not want to be in business with their partners or significant others. And also consider whether or not their partners have their own estate planning. And do you have the right agreements in place? In terms of protecting yourself from a divorce, consider having a prenuptial agreement so that your business interests are protected. As for bankruptcy, you need to think about in your operating or shareholder agreement whether you want that to impact your agreement with your partners. The next issue is the estate planning for business owners. As a business owners, you have additional and unique needs that wouldn't necessarily be served with just a regular estate plan. As a business owner, you want to retain control of your business and property while you're living. You want to give what you have, including your any type of business interest, to the people that you love when you want to, in the way that you want to. You also want to protect your assets, both personal and business, and save as much possible for your family from taxes, creditors, and predators. And you want all of this done without unnecessary cost or delay to your loved ones. These are some questions that I want you to ask yourself as a business owner. Do you have a business succession plan in place? And if you do, what does it look like? And have you evaluated that in the last couple of years? Even if you do, is there a mechanism to fund a potential buyout? You need a proper succession plan, a proper buy-sell agreement, disability insurance, and life insurance. I want you to think about the self-assessment for your future goals. What do you want your practice to look like 1 year from now, 3 years from now, 10 years from now, and 25 years from now? Now, many people ask me, and a lot of physician owners ask me, what is a buy-sell agreement? Now, think of a buy-sell agreement as a legally binding contract that outlines how a partner's share of a business may be reassigned if that partner dies or otherwise leaves the business. Essentially, you're planning in advance for the exit of yourself from the business, either voluntarily or involuntarily. This is critical when you have multiple partners. Most often, the buy-sell agreement stipulates the available share will be sold to the remaining partners. However, it depends on certain situation. The buy-sell agreement will contemplate death, divorce, or a departure of a partner. All of this is critical because it affects the management and control of the business. A well-drafted agreement anticipates the intent and needs of the owners and you as a business owner, any potential conflicts that may arise from them, and how things should be addressed if someone wants to sell his or her interest in the business or is forced to dispose of a business, such as a bankruptcy. So when you're thinking about an effective buy-sell agreement, think about when and under what circumstances a business may be disposed of, may dispose of an owner's interest, whether the owners or the business have the opportunity to buy the interest from the owner prior to a sale to an outside party, and how much to charge for that interest, and whom the remaining owners are willing to accept as a substitute owner. One key line of defense is thinking about and doing an insurance audit. Do you have appropriate insurance to cover all of these personal and business risks? You have to think about your physical, if you own property as a business, liability insurance, vehicle insurance, if you have cars under your businesses, key man, if somebody was critical to your operations, errors and emissions insurance, umbrella insurance, and then also going back to the buy-sell agreement, insurance to fund that buy-sell agreement. In this day and age, it's also critical to think about disaster and preparation planning. Sometimes your office may be subject to hurricane and other natural disasters like a tornado. You want to think about a continuity business plan. And then also unreasonable and unthinkable situations like the pandemic. How do you want to handle that? How have you experienced COVID? And then cyber attacks or technology failures. A lot of businesses are relying on technology. What happens if someone tries to take that private information, or if you are subject to a cyber attacks? These are just a few of the key critical things that you can do and think about when you are thinking about protecting your business. I invite you to schedule a complimentary consultation with me, Chair Stella Cruz, at 770-637-8813. And please reach out to us. We have a complimentary self-assessment business audit that I'd love to share with you and discuss. Please feel free to call or reach out to us today. Thanks.